Oh, Dan Fitzpatrick here, stockmarketmentor.com, and I want to look at Intel today. Now, first of all, this is how it looked yesterday. It was up above 54, and then they reported earnings. The earnings, they actually beat Q4 earnings, but their guidance was pretty bad. And so this is what happened to the stock. Now, it closed down. I'm just sorry about that. I had to get my glasses on because I'm blind. Closed down 18%, but it actually opened down just 14%. Now, typically, I want to get into some intraday stuff here, but I want to frame it this way. First of all, typically, when a stock gaps down this much, the if you're a day trader or just trading the opening rotation, the textbook trade here is to fade that gap. In other words, to buy the gap because you're going to get, just think about it as a rubber band, like the rubber band gets stretched this far, especially if it's weak guidance. It would be one thing if, I mean, because that's always in the future, duh. But it would be one thing if it was really, really horrendous all across the board where they didn't make as much money as everybody thought they were going to make. And maybe there's accounting irregularities and maybe something else is happening too. Then a stock that gaps down was just going to keep going. But that really wasn't what you would think would happen with Intel. And so the typical thing you're going to do is you're going to see the stock gap down this much. And people that were short the stock, I don't know why you would want to be, but people are. People that were short the stock are going to be going like, yippee, now's my chance to cover my short and make a nice trade. And then at the same time, people that have been waiting to get into Intel, waiting for a big dip, maybe they had planned on buying this after earnings if the stock really tanked. They're going to come in and buy. So you're going to get a lot of folks buying a big downdraft like this, and then you're going to catch it on the upside. So is that really what happened? Well, I'll just stick with this chart because I don't have to go to any of the intraday stuff, though I might later. But this is the deal. In fact, yeah, I'm going to go. So I've stretched my intraday chart window here. I typically have four charts with different time frames, but here's one with the excuse me, 1 minute, and then the 5 minute. So I want to explain something. So the stock really gaps down here, 14%, right? Now, right away. So 1 minute chart again, right away, buyers come in, they take the stock up a little bit, but it didn't go that far. And then the stock comes back down, undercuts this 1 minute bar. And here's the 5 minute bar right here. The low is 46.13. So it's like right there. Okay. So this is the 5 minute bar, runs up and then rolls over. So now this goes on, let's see, 50 minutes in. This actually undercuts this initial 5 minute bar, like right here. So what do we have? We've got a stock that gapped way down, made just a real quick kind of little whoop-de-doo for a minute, this a minute chart. And then it fell even lower. Okay, that's a bearish sign. That should get you really, really looking at this bounce trade as not much of a bounce. So then this comes back up a little bit. Now we're into this candle here, comes back up, but it barely makes it. It doesn't even make it past the opening rotation on the first minute before it rolls over again. So now as it rolls through and comes back down through this volume weighted average price indicator, the VWAP indicator, this right here at 945, as the stock runs to, like, basically we'll say at like 46.75. So the stock comes down here to 46.75. This is the end of the road right here. This is the end of the road. You got to say, I mean, frankly, this should have clued you in. right here. When this comes up here and it doesn't continue on, instead it rolls over. What you got to remember, and I mentioned this to our people in my live session, which was about just an hour ago, I mentioned institutions don't change their mind. They don't sell a bunch of stuff here and then go, oh crap, we meant to buy, and then they push the stock back up. They don't do that. And so when you see this roll over here, second time around, that's the end of it right there. You got to not be in this stock and then just feel this kind of 4 or 5% pull back as you wait for your daring trade, buying a stock that's down 14 or 15%. You wait for that to play out. This tells you right here that this is a trade that's not going to work. Okay, so what are we going to do on Monday? Now we'll get back to present day, daily chart. I say you don't really do much of anything on Monday. I was looking at JP Morgan the other day. Remember, this really got it, really took it in the shorts here. And it looked like it was going to rebound here, but then it didn't. It fell down even lower the following day. And then finally by here, the stock had kind of the selling had kind of run its course, and then the buyers came in. This wasn't, I didn't even look at this. I mean, I looked at it, but this is not my kind of trade. But so the stock came up a little bit, but it really wasn't much to speak of. Okay, well, why is that? You look at the big sell-off that this thing had, like not everybody got out of the stock that wanted to. A lot of times you're going to see a stock that's ultimately going lower like this. You'll see it rally just a little bit, and this actually gives people a chance to get out of their losing position at a little bit better price than they had the day before. I think you're going to see this with Intel. I'm not going to predict when this stock is going to rebound. May rebound on Monday. It may not. By the looks of this, as fast and as hard as this come down, I can't imagine it doing that. I just haven't seen stocks do that. But I can envision this coming back down maybe for another couple days, but then ultimately running higher. Something like that. I can see it. I could see it doing this. However, best case scenario, I don't see this as much of a trade. I don't really see it as a trade at all. Only reason I'm pointing it out to you is because semiconductors are generally working pretty good. Intel hasn't exactly been on the all-star team for quite a while, but it is something to watch. I would say avoid this. In fact, frankly, I don't see any semiconductor stock at the present moment that I'm just going like, oh my gosh, I got to go out and buy that. Got to go out and buy that stock. But this is how I would expect this stock to trade, down a bit more. But then ultimately, you're going to get a little bit of a recoil here, a little rebound, but it's not going to amount to much. So don't get sucked into this thing. Almost 300 million shares traded today, and that's kind of a lot. And they were all being dumped on the market. The bids were just being hit all day long. So don't assume that that selling is over. It's close, but it's not over. And even when it does get over, then the question is, how much buying are we going to see? My bet is not much. So, all right, that's all I got for you. Members, recorded about an hour's worth of trading tips and also going through our active trades. We're getting the first double that we've had in a while. So definitely check that out, okay? All right, see you guys later.